Property has always been one of the most attractive investment instruments for the community. Apart from being a basic necessity, property also offers promising long-term benefits. However, investing in this sector is not an easy matter. It takes a mature strategy so that private housing is not only a place to live, but also has the potential as a profitable investment asset in the future. In the world of property, an understanding of long-term strategies is very important. Many people start by buying their first home to live in, without considering the aspect of investing in it. In fact, if designed well, the first home can be a starting point in building a portfolio of properties that generate significant profits. This article will discuss how a private residence can develop into a productive investment asset through careful planning, the right financial strategy, and a deep understanding of the property market. For many people, buying their first home is a huge accomplishment. This decision is often based on personal needs, such as a location close to the child's work or school, available facilities, and prices that match financial capabilities. However, there are other factors to consider if you want to make this first residence an investment in the future. First, strategic location selection is a major factor. Developed areas with good infrastructure, easy transportation access, and adequate public facilities will have the potential for higher property price increases. For example, developing areas such as suburban areas that are experiencing population growth and the construction of commercial facilities tend to have the prospect of increasing property values in the long term. Secondly, considering the type of property being purchased is also very important. Whether it is a tread house, apartment, or commercial property, each has its advantages and disadvantages. Tread houses, for example, have the potential for a more stable price increase due to high demand. Meanwhile, apartments in the city center may be more attractive to young people and working professionals, so they can be easier to rent. Third, the source of funding used is also a major consideration. Buying a home with a home ownership loan (KPR) scheme is the most common option, but it is important to take into account the interest and tenor of the installments so as not to burden finances in the long term. Having a mature financial strategy from the start will help manage property investments better. After having a private residence, the next step is to use it as an investment asset. There are several ways to optimize a property in order to make a profit, one of which is to rent it out. If the house or apartment is in a strategic location, renting it out can be a profitable option. For example, properties close to business centers, universities, or tourist destinations have high rental demand. Homeowners can choose a long-term or short-term rental scheme, depending on the market they want to target. In addition, making renovations or improvements to the property can also increase its selling value in the future. Minor repairs such as repainting, replacing flooring, or updating the kitchen and bathroom can increase a property's appeal in the eyes of potential tenants or buyers. Proper renovation not only increases comfort, but can also significantly raise property prices. On the other hand, for those looking to expand their investment portfolio, selling their first home to buy a larger or more strategic property can be a wise move. By taking advantage of rising property prices, homeowners can earn substantial profits to reinvest in other properties that have higher potential. After understanding how to optimize the first residence as an investment asset, the next step is to expand the property portfolio. Many successful property investors start with one home, then gradually expand their portfolio by purchasing additional properties. One commonly used strategy is to use the proceeds from the first property to fund the purchase of a second property. For example, by renting out the first house, the owner can get passive income which is then used to pay the second house installment. With this strategy, one can build a property portfolio without having to have a large capital at the beginning. Diversification is also key in a long-term property investment strategy. Not only focusing on one type of property, but also considering commercial properties, such as shop houses or boarding houses. Commercial properties often provide higher returns than residential properties, especially if they are in strategic locations. In addition, the use of technology is also increasingly important in property investment. Today, many digital platforms make it easy for investors to search, buy, and manage their properties. With technology, information about the property market, price trends, and tenant demand becomes more accessible, so investors can make smarter decisions. Although it has many advantages, property investment also has challenges and risks that must be taken into account. One of the main challenges is the fluctuation of the property market. Property prices can experience a significant increase, but can also decrease due to various factors, such as economic conditions, government policies, or changes in community trends. In addition, maintenance costs and property taxes are also factors that should not be ignored. Properties that are not properly maintained can decrease in value, while high property taxes can reduce investment returns. Therefore, investors must have a careful financial planning to anticipate these costs. Another factor is the liquidity of property that tends to be low compared to other investment instruments such as stocks or bonds. If a person needs quick funds, selling a property can take quite a long time, depending on market conditions. Therefore, having an emergency fund reserve is very important in a property investment strategy. Property investment is a long-term strategy that requires careful planning and a deep understanding of the market. Starting with a private residence is a good first step, but with the right strategy, the property can develop into a profitable investment asset. Strategic location selection, good property management, and investment diversification are the main factors in achieving success in the property world. Despite the challenges and risks that must be faced, with the right strategy, property can be a stable source of income and provide long-term profits. For those who want to build wealth through property, consistency and patience are the main keys. With a systematic approach and careful planning, a private residence is not just a place to live, but also a stepping stone to financial freedom through property investment. After understanding the basics of property investment from private residences to a wider portfolio, the next step is to ensure the sustainability of that investment. Many novice investors are tempted by instant profits and end up stuck in less mature decisions. To avoid this, a long-term strategy is needed that is oriented not only to current profits, but also ensures the growth of asset values in the future. One of the strategies implemented by experienced property investors is to reinvest from the profits earned. For example, profits from price increases or rental income are not directly used for consumption, but are reallocated to purchase new property. With this approach, the value of assets continues to grow over time, creating a favorable snowball effect. For example, an investor who buys his first home with a mortgage and successfully rents it out can use the rental income to pay the installments. When the value of the property increases, he can sell it at a profit and use the funds to buy two other properties that are smaller or in a condition that requires renovation to make the value rise higher. A great advantage of property investment is its ability to generate passive income. However, in order for the property to still provide positive cash flow, investors must be careful in determining the most profitable rental scheme. Long-term rental, suitable for areas with high residential demand, such as office areas or family housing. The advantage is stable income and lower operating costs. Short-term rental, Airbnb, or guest house potential to provide greater profits in a short time, especially in tourist or business areas. However, it requires more intensive management, such as regular maintenance and marketing. Boarding houses or studio apartments, suitable for investors who want to target the student or young worker segment, with higher profits because several units can be rented at once. Choosing the right scheme depends on the location, target market, and capital owned. What is clear is that the property must be well managed so that it is always attractive to tenants and does not experience vacancies in the long term. As with other investments, the property market also experiences dynamics that are influenced by various factors, such as government policies, economic growth, and people's lifestyle trends. Therefore, an investor who wants to be successful must always keep abreast of market developments. For example, the increasing trend of remote work in the aftermath of the pandemic has made many people prefer suburban housing to apartments in the city center. This phenomenon can be an opportunity for investors to look for properties in fast-growing suburban areas with more affordable prices but with the potential for high-value increases in the future. In addition, sustainability and technological factors are also increasingly influencing property values. Residences that are environmentally friendly and equipped with smart home technology tend to have greater appeal in the market. Investors who are able to anticipate these changes can take advantage by developing properties that match future trends. One of the common mistakes made by property investors is to focus too much on one type of asset or one location.